You're a portfolio manager. How active were you this month?
Well, we were fairly well positioned coming into this month, so we've been active in terms of what we're looking for that might have gotten hit with the rest of the stocks. So we were somewhat active, but it's not like we had a much different activity level than normal because we were fairly well positioned coming into this because we were concerned about this going into the end of last year.
If someone has a bullish cast, where is the opportunity right now?
I think there's a lot of opportunity in some of the tech stocks that have gotten hit. I mean, you saw that rally in the NASDAQ on Friday. I think part of that was Apple coming out and saying that some of their supply chains have eased. I think that gave people some comfort that some of the issues that they were concerned about are getting a little bit better.
I don't have the numbers in front of me, Sarah, but this is really important. Joe Feldman with Dana Telsey's advisory group has operating income at Amazon. And again, over a longer time frame of 24 months, it's breathtaking, the growth. When you look at the tech stocks, you're not looking at 1 week performance or 1 quarter. How long is your timeline to judge the value of big tech?
I think the timeline has to be pretty long because some of those companies have grown fairly well for a very long period of time. And when people started to talk about the tech issue earlier on with the rate tightening issue, there is a bifurcation in technology for the companies that can grow and grow profitably. And I've said this before, and I really think that you're really starting to see that. But there are some stocks that have gotten hit with all of this that I think are decent values here. I mean, you've got some 15 times earnings stocks in some of the chip makers. You've got some of the chip equipment makers that are cheaper now, too, than they were before. And I think that there's some real growth ahead because you're going to continue to move where we're making semiconductors. If the supply chain issues have taught us anything, I think you're going to see a different people are going to be basing their production of semiconductors in other places than they have been because they don't like the dependency. So I think that there's a long runway for some of these stocks to grow. And I think that is what people are going to be looking for as we go forward.
Sarah, it has never been a fundamental issue. It's always been a valuation issue, at least for 2022. And some people are looking at the potential for real rates in the United States to go to zero. David Kostin, among them, of Goldman Sachs. How much are you including that scenario when you say it is time to start going in and buying some of these high quality names?
Well, I mean, if you think about the fact that historically we had never seen negative rates before, I think just getting back to zero should not be a cause for major concern. And I think that growth can still happen under those conditions. But the problem with inflation is that it's systemic in ways that is very difficult to fight. The energy issue is one thing. The housing issue is another thing. And those are not that easy to fix. I mean, if you've got a global move away from hydrocarbons without a lot of non-expensive ways to replace them, that's not going to be a transitory issue. That's going to be a longer-term issue. And the housing problem, as rents go up, is going to be non-transitory as well. So I think that just getting back to zero is not a tragedy for most of this group. But I think that the longer-term question is going to be, what does that look like going forward? Where do rates go? And what happens in the interim to inflation?
But Sarah, a lot of people are saying that because of that inflation story, it's the cyclicals that you should lean into and not necessarily the growth names that have benefited by low rates. Do you disagree with that? Are you saying that actually these big names have the greatest capacity to grow with inflation?
I think some of these big names have the biggest capacity to continue to raise prices. The problem with the cyclicals is that if you've got a slowing economy, then you've got, a tailwind on one side and a headwind on the other. And I'm not sure that that's going to be the biggest place to make money, although we think some of those stocks have come down too. So I wouldn't ignore them either. It's really just looking at individually, stock by stock, what does it look like for them in the future for the next 2 or 3 years? What does it look like what does the interest rate do to them? And what do their end markets look like? And I think that's really the kind of individual stock by stock analysis that has to be done.